Hello everyone, this is Matthew Frailey with BreakpointTrades.com. By the way, that short video was a little AI video I generated just playing around. I asked AI to make me a video of traders on Wall Street walking around dressed in Christmas outfits. Anyways, my name is Matthew Frailey. Founded Breakpoint Trades 21 years ago to provide the best technical analysis on the planet as well as mechanical trading systems, which is my personal passion. I hope everyone has had a wonderful weekend. Christmas is only 3 days away, so hopefully everyone had a great weekend. Again, this is going to be a weekend review, technical analysis review of the markets, pre-Christmas, of course. This is the comprehensive weekend newsletter for Breakpoint Trades. This is our backend recorder for our website subscription service, which I'm going to go ahead and get started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone had a wonderful weekend. It is Sunday afternoon, December 22nd. Christmas is only 3 days away, as you know. And this is the very comprehensive newsletter for Breakpoint Trades. By the way, if you happen to be new here, these weekend newsletters are more comprehensive than our intra-week newsletters. Why? Because it's the weekend. We cover a lot more things. There's time to do it. All right. Again, appreciate all your support. This newsletter here is divided into 5 major sections. Obviously, though, we have a lot to discuss. Newsletter will probably take anywhere from 40 minutes to close to an hour. Again, we cover everything in explicit detail. These videos aren't meant to be short, 5-minute videos for those of you with very short attention spans. Watch TikTok all day. This is for people who want to learn and dive into the charts. So anyway, let's see. Again, newsletter is divided into 5 major sections. First off, we have my opening thoughts on the market. Then we're going to move on into some of our trading systems. Last week on that correction, quite a few mean reversion systems started to take long trades on SPY, ETF, and MES futures, as well as some of our VIX volatility systems. Okay. And as far as the KISS systems, a lot of those, remember, they're long only. A lot of those have closed out recently, which is understandable. There's still quite a few long, of course. Then I'll move on to the general market analysis. We'll do a top-down approach with the S&P 500, NASDAQ, IWM. We look at the monthly, weekly, daily, and intraday time frames. We'll look at a few key market indicators, the VIX and some other breadth indicators. We'll look at the bond market and yields. And we'll look at quite a few of the major sectors just to show you how things look at under the surface, and a few world markets which have been pulling back quite nicely. Then we'll look at the US dollar, Bitcoin, commodities, precious metals, gold, silver, and GDX mining stocks. Like I said, Merry Christmas, everyone. Christmas is on Wednesday. The US market, as you know, will be closed Christmas Day. And on Tuesday, it'll be open a half day. It'll close at 1 p.m. So it's going to be, volume's going to be light this week. We're in the holiday mode. A lot of professionals are taking off, and that's the time of year to do it. All right. And again, as you know, the market finally had a rug pull last week. We've been constantly pointing out the horrible negative breadth and divergences over the past few weeks. Well, that finally played out last week with a major sell-off. And, quite a few of those mean reversion systems started going long last week on Tuesday, Wednesday, Thursday. On Friday, we had a strong rally, oversold rally in the market, which started in the morning with the futures. And they continued to midday. We had about a 190-point rally in the futures, ES futures. That's quite a move into midday before topping out and then pulling back about 60 points into the close. Okay. That said, none of the mean reversion systems exited on that rally. I still favor higher prices, and we have the Christmas, holiday here coming, and the typical Christmas rally. At this time, I favor an initial bounce being a move up. That's that initial rally we had on Friday into midday, and the pullback we had in the afternoon, I'm viewing that as a wave B. Then I'm looking for a C wave higher. Realize there will be stiff resistance around the 61.8 fib, but especially the previous breakdown area where the index has lost their support. For the week, the S&P lost 2%. Dow lost about 2.25%, NASDAQ 2%. IWM small caps, well, they continue to get hit the hardest, down 4.5%. Nice rally on Friday, as I said. Major indexes were up about 1 to 1.2%. Okay. Again, US dollar had a big rally last week, and then finally, as well as the 10-year, but I'm seeing some divergences on those time frames. That could also help the market bounce further. And, longer term, I am concerned about some sort of intermediate high here, nice correction in 2025. All right. And let's go ahead and get started with things. So first off, item number 2 this is the NYMO. This is the NYMO McClellan oscillator. Remember, we were talking about this early last week before the correction. And we talked about this last weekend. So again, all these breadth indicators were moving straight down. We talked about the negative breadth in the market. It was discussed in the news and CNBC a lot. A lot of people were very aware of it. But you can see the NYMO was just plunging here, while the S&P was remaining relatively sideways. So that was a negative sign. Well, that finally let loose last week, especially on Wednesday. The NYMO closed below its lower Bollinger Bands 2 consecutive days. That's usually a good buy signal, mean reversion signal at least. And so far we got that bounce on Friday. You can see here previous examples when the NYMO closes below its lower Bollinger Bands and the S&P at the top. Again, it usually gives you quite nice long signals on the market. Sometimes they're just a quick bounce and sometimes they catch major bottoms. Pretty reliable little mechanical type system. And image number 3, here's the RSP. That's the equal weighted S&P ETF. So each component in there is equally weighted instead of the S&P where you have, 10 of the stocks represent 30-40% of its movement. Okay, so that takes it away, but you had the same thing here. Again, obviously equal weight's going to move with the S&P, as you can see here. But you can see here, equal weight was just nosediving all during December, while the S&P was at new highs and holding up. Well, that was unsustainable. Finally let loose last week with that nice correction in the S&P. Okay. Finally, image number 4. So here's a 15-minute view of the S&P. And again, I'm going to discuss this later on in the video, but I just wanted to show this early on. So just so you can see what I'm thinking versus waiting, 10 or 20 minutes before we get to those charts. So here's the 15-minute view of the S&P. You can see the support here. We were going sideways in this coil. It ended up being a bearish coil, A, B, C, D, E, with a lower high inside the coil. We lost that big shelf support on Wednesday. Absolutely nosedived. All right. Then we made another low there on late Thursday, set up a nice MACD divergence, RSI divergence. Then we had that big rally on Friday morning. So this is what I'm favoring, that rally being a wave A. Okay. Then we got a ABC pullback on Friday. May or may not be complete yet, but I'm viewing that as a wave B. Then I'm looking for another rally in wave C. Okay. Now, one target would be the 61.8 fib, right around 6,000 on the cash. And of course, this previous breakdown area, which I went ahead and extended out, this is all big resistance, guys. So I expect the market to really struggle between the 61 fib and this area. Would be a good shorting opportunity. But for now, I think we get a nice move up to this C. Again, we'll see if we get a little weakness on Monday or not, but regardless, I'm looking for that move higher. Okay. Oh, and finally, chart number 5, here's SPXU. That's the triple inverse ETF for the SPY. Remember, I put this out early last week as a nice hedge on the market. I pointed out the little bottoming pattern here. Gave you a nice trade if you took it. Hope you took your profits on that spike, though. All right, moving on. So let's talk about the trading system. So image number 6 here, this shows you the mean reversion systems that started buying this pullback in the market. Okay. So remember, I have 21 mean reversion systems. I run them across ES or SPY and ES futures, so both instruments, just to give us the most trading opportunity. So you can see on the SPY here, we actually have 4 subsystems that took entries. The QEBTS, the trend pullback. Both of those went long on Wednesday. The CCI oversold, went long on Thursday. By the way, that's one of my favorite systems, statistical wise. Has a profit factor of 250 and 96% winning trades. And on Friday, we actually had another system trigger, the S-trap long. Okay, now I didn't send this out to our subscribers. I actually didn't see it. But we also have a lot of systems already long, so I don't think anyone cares really. But all these systems are long on the SPY, and on the ES futures, we have the trend pullback. Took a long trade on Thursday, and this QE Momo, which it can be early at times, and it clearly was. It went long first entry on Tuesday, second entry on Thursday. Now, the point here is none of these systems have closed out yet. They're still holding their trades. All right, even the CCI system, which has a quite aggressive exit, that doesn't wait very long on a bounce to exit. That's another reason why I think the market's push higher still in that wave C I talked about. Next, image number 7. Here is the volatility systems. Now, I post these on the website. I don't have an official area on the website yet where I send out trade notifications. I just been posting for informational purposes. I actually have 15 of these systems, but on Friday we had IBM, Amazon, Goldman Sachs, and Apple go long, as well as SPY, Qs, and IWM. So a lot of these went long as well on Friday. All right, quite a few systems. And again, I think these will overall get a nice trade. By the way, one of our subscribers wrote in complaining that we have too many systems. I kind of have to laugh about it, guys. So my joke there is, I understand we have a lot of systems, but you have to define your trading style and pick what fits you. That'd be like me going to a bar or nightclub. I'm single, and I'm like, oh, there's too many hot women in here, too many hot chicks. I can't pick. Or I go to a buffet. Oh, there's too many choices here. It's like, come on, guys. Just be logical with it. I mean, that's kind of a stupid comment, I think. So, I love that we have all these systems, and I think most of you do as well. All right. Okay, let's go ahead and move on. Let's move back to the general market newsletter at hand. So item number 8 shows the index sector table, what transpired on Friday and last week. Again, as you know, Friday we had the big rally. And despite that pullback, the index is still ended up about 1 to 1.2%. Of course, nice losses for the week with the Russell clearly leading to the downside. And if we look at the 21 market sectors here, again, for the week, every single sector was down, as you can see. Really good, big losses here, especially on some of these individual sectors. Metals and mining down 8.4%. Oil services down 6.7%. Some home builders down 7.35%. So those are the biggest down sectors, but again, everything was down. And Friday, nearly everything was up. Okay. Currency-wise, US dollar up for the week, 0.8%. It's had a big rally over the last, couple months, but I am seeing some divergence there. And on Friday, it was down 0.5%. Cryptocurrencies, Bitcoin also has pulled back with the market. It's back below 100,000. Remember, I talked about that divergent high on the MACD that was forming. I warned about that, not to chase that. So that's pulled back with the market as well. Commodities for the week, mostly down here. Natural gas, though, had a big week, up 11.5%. Closed back above its 200-day moving average, which I've been talking about. So we'll see if it can hold that. The general commodity index down 1.5%. Crude oil down 1.5% as well. Copper, uranium, all these things were down. Even agriculture, which has been stronger than most of the commodities. And precious metals down as well. Remember, we've been cautious on the precious metals since late October when it hit 2,800. But we do view this as a fourth wave bullish consolidation. And over time, once this is complete, we're looking at new all-time highs, gold above 3,000, etc. And as far as the bond market, another big rally last week in the 10-year, 30-year Treasury yield, which has been spooking the market, but they pull back on Friday. And image number 9, here's the economic news calendar. Really not going to talk much about this. Like I said, we're in holiday mode. Markets closed on December 25th. It's open a half a day on December 24th. Closes at 1 p.m. Okay, let's go and jump to the charts, folks. So chart number 10, here's the daily chart of the 5 key major indexes. Again, you can see, and one thing, the Dow here at the top, that was representative of what was happening under the surface. Like I said, basically since early December, you had just a handful of large cap tech stocks were leading and holding up the entire market. Okay. And, but on the Dow, you can see it was a very kind of indicative of what was going on under the surface. It was very weak. In fact, it had 10 trading down, 10 consecutive down trading days in a row. I know that's a little redundant, but anyway, 10 consecutive down days. In fact, that was in the news. Hadn't happened since 1974. Then finally on Friday, we got a bounce. Again, everything's below its 90 MA still. And you can see the other indexes. The Russell here at the bottom has been the weakest. Next, let's move to the individual indexes. Chart number 11, here's the Dow. So the Dow, remember, it finally broke this channel last week. It had down 10 consecutive days. It did find support in this demand zone I talked about. And I said, watch for resistance at the broken channel line, which notice on Friday, that's exactly where price stalled at the broken channel. So astute traders or you guys could have sold, if you were long here, you could have taken some profits there. So pulled back. Again, I don't think this bounce is over though, but this area for now is resistance. And chart number 12, here's UDOW. Remember, that's the leveraged ETF play, triple leveraged. So you got a nice trade out of there, especially on Friday if you took profits at that retest of that broken trend line. Next, moving on to the S&P 500 charts. Chart number 13, here's the monthly S&P 500. This is kind of like a paint dry system. Goes back to 1994. This chart is great about giving you the long-term trends. I also have a paint dry system on the website. But again, we've been in a secular bull market since the March 2009 lows. Nothing's changed, obviously. This upper channel could be a target over time. And otherwise, this chart is very good just from again, it's like a paint dry. This 14 link stochastic, very good guide with this 50% area. Basically, if you're a long-termer, you don't want to ever do any trades hardly. I mean, you could probably not stay long in the market unless the S&P, this stochastic falls below the 50% area. Those tend to define the bear markets. You could see it would have kept you out of the tech bubble crash. 70-80% of it would have kept you out of most of the 2008 crash, and would have even got you out a little bit of that 2022 crash, okay, or bear market. Next, chart number 14. Here's another monthly view of the S&P. Again, you can see the same uptrend channel. One thing to note, guys, we are possibly working on a wave 5 of 5 here. That could complete that whole move off the 2009 lows. Again, there's other counts. There's counts that this could still be a 3 of 5, which I'll show you later on a weekly chart. Again, this isn't something to worry about right now, but it is something to just take notice of and be aware of. Next, moving on to the KISS system. So here's the S&P 500 daily high performance KISS system. This has been doing outstanding, keeping you protected with the smart trailing stops. That's what it's designed to do. It allows you to avoid big market corrections. And anyway, this went to cash last Wednesday. Not surprising. And so it is currently in cash. If the market does start to rally again to new highs, obviously it'll go back long. I still think the market's going to be in chop mode here for a while. Next, chart number 16, here's a weekly view of the S&P. So you can see here, again, we've been in this, we had that bear market in 2022. We bottomed around that 200-week moving average, which we talked about is very important. And then we've been in a very strong uptrend channel since late 2023. Okay, there has been MACD divergence. MACD divergence is never an RSI divergence. Divergence on its own is never a sell signal. I mean, we've had divergence since, basically June, July. So, if you worried about that, you wouldn't be in this uptrend. But it is still there. Notice the pullback last week came into this demand zone where it found initial support. Next, chart number 17, here's another weekly chart. So this is the other wave count I was talking about where this could be a 5 of 3. So if that's the case, and it's possible that wave 5 of 3 is already put in, guys, we're going to form a lower high on this rally that started on Friday. If that's the case, we could, we could be now in a fourth wave major pullback. And this pullback could be quite deep, guys. It could be 500 points, 900 points on the S&P. It could take a few months. So it's just something to be aware of. And once it's complete, then you'd rally again to new all-time highs in a wave 5. Again, there's many scenarios. That's one scenario. One scenario I'm actually particularly favoring. I don't favor that we've put in the wave 5 of 5 into that secular bull market, but I could see this scenario occurring. And also notice on the RSI indicators here, notice the nice coils you can draw on the RSI. Remember, draw trend lines on the RSI whenever you can give you some nice triggers. And chart number 18, another weekly chart, just showing you the distance here. We are away from the 89-week moving average. All right. And again, everything always reverts back to the mean, right? Eventually, we will need to revert back near that 89-week moving average. Okay. If we are in a major wave 4 correction, I could see price eventually working down to there. Remember, this is going to be moving higher. So, and if that correction were to take 2 or 3 months, this could work up a few hundred points and price could end up meeting it. Next, chart 19, moving to the smaller time frames. Here's the daily chart. Remember this nice channel. We broke that last week. Bounced a little around this demand zone. Notice there's an open gap here, though. We didn't fill it. I do think this will be filled sometime. Again, so once this Santa Claus type rally is over, I think eventually we come down again and fill that gap over time. Next, chart 20, here's another daily chart. Just shows you another way to draw the trend line, a little steeper, which we broke. And notice how Friday's rally basically nearly back tested that before pulling back. And chart number 21, here's a 2-hour view. Shows this wedge-like pattern we've been showing, which not a proper wedge because we didn't make a fifth wave high there, but you could see we had a little shelf support. We absolutely had that crater move down on Wednesday. Then we got into that open gap a little bit on Thursday. We didn't fill it. I do think that will be filled over time. Then rallied on Friday, pulling back. I still think this rally, like I said, goes higher. But I still think over time, once the rally is in, sometime well after Christmas, I think we come down here and fill the gap at minimum. Chart 22, here's the 60-minute chart. Shows you the same thing. Here I added some fibs. So I already marked this potential A move up, which I favor. Working on a wave B pullback, which again may or may not be complete. We could still have weakness here coming into early this week. Usually the Christmas rally starts after Christmas, but again, charts are going to do what they do, so we'll see. Again, I still favor overall this being a B. Then we're going to move higher in a C to the 61 fib or a little bit higher. Then I think we could come down again, guys, and fill that gap. Unless they magically were able to rally back to the new highs. But this area up here, guys, is going to be really stiff resistance where we broke down from. And finally, chart 23, here's a 15-minute view that I showed you, one of the first charts above. Again, this shows a little more detail. Wave A move up on Friday. So far, a little ABC on late on Friday on the pullback. Possibly could have completed B, or we go a little bit lower. If we go lower, I'm going to be looking to buy that. Then I think we move up again in a C. We stall out somewhere around the 61 fib or a back test of this previous broken support, which is now resistance. Okay. Next, moving on to the NASDAQ. Here's the NASDAQ High Performance Daily System. This also got out Wednesday last week as well, and then back in cash. Next, chart 25. Here's the weekly view of the NASDAQ, which is down 2.25%. Remember, we've been talking about this potential fifth wave high, the MACD divergence. So again, otherwise, so far the bounce, the low last week bounced off that 9-week EMA. Next, chart 26, here's a daily view of the Qs. So this is still holding its channel and 50-day moving average. Nice bounce on Friday. Chart 27, here's a 2-hour view. Again, showing how, this is what Steve and I have been showing, this completed 5 waves. You can see wave 1, 2, 3, 4, 5. And after you get 5 waves, remember, I always tell you guys, be cautious. And well, we had RSI MACD divergence, and then boom, big sell-off into the demand zone, bounced. But again, so I still think this will work higher, but ultimately I think it comes down again after the bounce is over. Next, chart number 28, here's the 60-minute chart, shows you the same thing, wave 1, 2, 3, 4, 5. Then we had our big correction into the demand zone. We bounced off that initially for now. And chart number 29, here's a 15-minute chart. Just like on the S&P, this is what we're favoring. So you had the fifth wave low here into Thursday with a MACD divergence. Then we had a wave A up, little zigzag down. We're working on a B, which again may or may not be complete. We could work lower. Then I think we rally up again in a wave C and form a lower high. Again, unless they're able to just really goose the markets and have a blow off. I'm favoring a lower high, but I am favoring another move higher first. All right. And chart number 30, these are kind of small. I didn't want to have so many individual charts, but these are the big cap tech stocks. So here is Tesla up here, weekly chart. Oop. You can see had a pretty big reversal. Finally, I mean, this has had one hell of a rally out of that coil. Here's Google. All these pull back, obviously. Here's Nvidia bouncing off that demand zone. Amazon bouncing off the 20-day moving average on Friday. Microsoft and Meta look a bit weaker. I apologize, these are a little bit tough to see, guys, but again, I didn't want to cover these individually, just in one big image. Finally, moving to the small caps, here's IWM, which is down 4.5%, the weakest index. So nice big sell-off there on Friday or last week. Next, number 32, here's the daily chart of IWM. So again, this has been quite a bit weaker than the other major indexes. Lost this uptrend line here. Here added some fibs. And this broken trend line now should now be nice resistance on a rally back. And finally, chart number 33, here's a 2-hour time frame. Remember, we lost that uptrend line, which we showed last week. Price came into this demand zone. So far, an initial bounce off of it. Okay, that does it for the major indexes, guys. Let's go ahead and move on, look at some indicators. So, chart number 34, here's the VIX Volatility Index. So, last week had a big spike up to 28. Remember, the Bollinger Bands had been pinching. I actually talked about that on December 4th. So, a lot of times the Bollinger Bands will pinch early before a big move, down move like we had. So that was a little early warning sign. Anyway, the VIX finally closed back inside its Bollinger Bands on Friday, which is technically a VIX Bollinger Band buy signal. Yes, it would have been better to buy on Thursday, obviously. That's when a lot of our mean reversion systems actually triggered. Next, chart number 35, here's the VIX, but this is the VIX VVIX ratio with the Bollinger Band. So that's the VIX, and that's the volatility of the VIX. So you get a lot of the same signals with the Bollinger Bands, but this actually gave you a buy signal on Thursday, so one day earlier than the VIX. So quite a bit better signal. Next, chart number 36, here's the NASDAQ and S&P, or NYSE with the NAMO and NIMO McClellan oscillators. Again, these both closed below the lower Bollinger Bands last Wednesday and Thursday, 2 consecutive days. That's usually a pretty good buy signal, and of course that resulted in a bounce on Friday. Next, chart number 37, here's the one chart I've been showing all month long. This is the S&P versus the Nifty 500 Indian Stock Exchange. Again, you can see how the two move pretty much together, lockstep together, but divergences show up at times, just like in late 2021, early 2022, when the Indian Exchange had a lower high, S&P had a higher high. Well, then we had a nice bear market correction in our market. Well, look at this very obvious divergence here. S&P made a higher high. The Nifty 500 did not, lower high. Well, is that warning us that we're going to have a pretty nice correction here early in 2025 for the S&P? We'll see. Next, looking at some other indicators. Obviously, things got buried last week. Here's the percentage of stocks in the S&P 500 that are trading above their 20-day moving average. You can see this had fallen from early December up here around 83% all the way down to 7.5%. So, basically back to April levels and October levels 2024. So market was quite oversold there. Chart number 39 here is the same thing, the S&P. This is the 20 EMA, so same deal. This got down almost to 5%. Again, basically, this was lower than the April levels, and you could see basically down at the October 2023 levels. So again, everything was telling you that things were very oversold on Wednesday and Thursday last week. Chart number 40, here's another chart. This is a zoomed out version of the percentage of stocks in the S&P above their 20 EMA. And you can see, again, it doesn't get down in these ranges that often. So you can see, this is the first time it had been here since October of last year. But this goes back to, 2014. And here's the percentage of stocks in the S&P 500 that are above their 50-day moving average. Again, just showing you how this had been declining essentially since October, making lower highs, and it really started to nosedive here in early December, all the way on before the S&P. So that was another early warning. All right, guys. So there's plenty of warnings about that negative breath, and that's the thing, guys. Things like that can occur for quite a while the market stays aloft, but almost always it eventually catches up. So it's always something you want to be aware of, okay, and pay attention to. Next, moving on to the bond market, here's the 10-year Treasury yield. Remember, this had a really good rally off this demand zone a few weeks ago. There is some MACD divergence setting up here, especially if this can pull back. That would help the market, but boy, rates have been super strong. Here is the 2-hour chart. Remember, in early December, I pointed out this fifth wave decline, wave 1, 2, 3, 4, 5, with a MACD divergence. Remember, anytime you see 5 waves, look for some sort of reversal. Well, we got that in a big way. Rates made a new high, okay, at least taking out the November highs. And it's still technically uptrending here. I can count wave 1, 2, 3, 4, 5. The problem with a 5 here, you don't really have any MACD divergence. So this still is quite strong. And chart number 44, here's high yield corporate bonds. Remember, they tend to move with the market. They lost their 50-day moving average last Wednesday. Still holding this uptrend line for now. Nice rally on Friday. Stalling over here around the 50-day moving average, of course. All right, moving on to market sectors. So we're going to see what things look like under the surface. Here's XLK Technology. Remember, we've had this drawn in a rising wedge for a while with that MACD divergence. Finally broke that wedge on Thursday. And you can see Friday's bounce. Where did it stall? The highs right at the back test of that wedge, which I warned. Next, chart number 46. Here is the semiconductors. Kind of this coil-like pattern. They've been weaker here than a general market. Little bounce back on Friday, but pulled back here, stalling here at these moving averages. Chart number 47, here's the transports, IYT. This sector has been quite weak. It's been selling off since late November, losing these moving averages, losing the uptrend line, 50-day moving average. Came all the way down, even undercut the 200-day moving average a little bit before recovering. Not a nice looking candle on Friday, basically a big indecision. You can see the big tail wick up and down. But it is logical to find some support down in here around the 200-day moving average. Chart number 48, financials, XLF. They lost their little shelf support. And you can see Friday's rally. Where did it stall? At the broken 50-day moving average. Chart number 49, here's the banks. Again, banks financials has been weaker. Pulling back, notice there's an open gap here, which will likely be filled over time. I talked about that MACD divergence there in November. Obviously, that played out. Moving on, chart number 50, here's XOV Healthcare. This sector's been downtrending since September. Of course, got nailed here even more recently with that shooting of the United Healthcare CEO. Bounced back a little bit on Friday, but boy, not much of a bounce. Moving average ribbons are getting kind of wide here, so this may need to be worked off for more of a bounce. Chart 51, here's XLB materials. Again, you can see, guys, how a lot of these individual sectors have been very weak over the last 1 or 2 months. This has been downtrending here since October. Lost a big support level in early December. Okay, so there's a lot of things that were weakening under the surface before the major indexes, guys. Here's XLI Industrial, same deal. This topped out in late November. It was weakening all in early December, well before the major indexes did, losing those support levels. Little bounce on Friday, but that doesn't look like a good bottoming candle to me. Chart 53, XLU Utilities, they've also weakened. That last high formed a divergence. You can see we had a little shelf support, which we lost on Wednesday. Friday, back testing it so far. 200-day moving average isn't too far below, though. Next, chart 54, here's real estate. This is the weekly. Real estate down 4.6%. With rates being, with a 10-year rallying, not surprised to see real estate struggling. Chart 55, here's the daily chart of IYR. So Steve pointed out this fifth wave high. You could see wave 1, 2, 3, 4, 5. Then we had which topped out in late November, then a big sell-off. Little demand zone here, which it's bounced somewhat around the 200-day moving average as well. There's also an open gap below, but clearly rising weights not helping the real estate market. And here's the housing market. XHB down 7.3% last week. Really big MACD divergent high up there, losing its 50-week moving average. This doesn't look too pretty, guys. And chart 57, here's the daily. Like I said, little double top back here, and it's absolutely plunged off a waterfall since late November. So you see my point, guys. A lot of these individual sectors have been very weak. You simply had a few tech stocks that were holding the market up in December, and that was the negative breath. Here's XLP Consumer Staples. Now this is pulled back. It's now not back to a support level. We'll see if it can hold here. You can see this has been previous big support. And another area, here's XLE Energy. Now XLE Energy also got smashed. I pointed it out when it was at the top of this range, sold off from there. Man, this had another waterfall sell-off also. That said, it's now near a bottom of a range. It is quite oversold, and I do like this sector a little fundamentally. I think this is one I'm going to be watching in 2025. I bought a little bit of this on Friday and Thursday just as a starter. Chart 60, here's the BPDR. That's the bullish percent energy index. So this is down to 32.5%. So it's not real oversold, but it's not way up here in the 60s and 70s. And you can see back in May, it was up here in 90%. Where remember, bullish percent charts, guys, only go from 0 to 100. Okay, so this is working lower. Also, some of you may have seen that Buffett bought a bunch of Oxy stock last week. This area, again, like I said, it topped out in November at $70. It's had a heck of a correction. It's sort of wedging here, so looks interesting. That said, I don't know if it's completely bottomed yet. Here's a weekly chart. So there's not really a lot of support in here. If you look at this past big up candle, really no support. There's a bigger demand zone down in here where if it were to work down into here, I definitely would be a big buyer. Next, chart 63, here's emerging markets. These areas have been weaker with that stronger dollar. For now, it's trying to hold around this demand zone, 200-day moving average. And of course, here's Brazil, EWZ, basically going parabolic downtrend. Strong dollars not helping these world markets, but also socialized government there, not taking it very well either. All right, moving on. Let's look at the U.S. dollar. Here's U.S. dollar, up 0.6% for the week. That last pullback found support on that broken trend line. Heck of a rally off that big support I pointed out in September, of course. We do have a little divergence here showing up on the RSI, though. And here's the daily chart. Like I said, the dollar had a hell of a rally out of this falling wedge back in September. I pointed out the MACD divergence, the clear 5 waves down. Remember, 5 waves, look for a reversal, which we got. Hell of a rally in that dollar. And anyway, made a new high last week again, but there is some pretty good divergence setting up here. And we had a nice pullback on Friday, so let's watch that. Next, chart 67, here's Bitcoin. So for the week, like I said, sold off 8.5% for the week. It's back below 100,000. I said do not chase that when it went over 100,000. You know, the time to be buying a bunch of Bitcoin, guys, is down here in the demand zone on this fourth wave, okay, or even a break of this little expanded wedge trend line. But way up here at the 100,000, over 100,000, no, that's where the lemmings chased it, the masses. And here's the daily chart, Bitcoin. So you can see formed three little consecutive highs. You could see on the MACD divergence. So that's why I said, even though, it got over 100,000, pulled back, then it went up again. I hope you didn't buy up in here because that was a really good divergence. And it typically follows the market, so it's followed the market on this pullback. One of the tradable ETFs, IBIT, same analysis applies here. Okay. Let's go and move to commodities. Chart 70, here's DBC, down 1.5% for the week. Like I said, it's been in this trading range for the last couple of years. Be interesting to see the direction this breaks eventually. Chart 71, here's the daily DBC, still stuck in this kind of coil-like pattern, very choppy. That said, one of my favorite charts is the CRB SPY ratio. That's commodities to the S&P. Remember, commodities have generally underperformed the S&P since 2022, but man, this is one pretty wedge. Got 5 waves, got MACD divergence, and you can see price is now starting to break out of the wedge. So is that telling us that we're going to see a correction here in early 2025 and a rally in commodities? We'll see. Chart 74, here's crude oil, which was down 2.5% last week, still stuck in this big old range, this kind of wedge-like pattern. Here's the daily chart. You get this bigger downtrend channel, and you have a coil inside the channel. So let's monitor that. Chart 75, UNG, natural gas. Look at this, guys. Finally, a nice close above its 200-day moving average. You can see it had stalled there, 4, 5, 6, 7, 8 times over the last year and a half. So now let's see if it can hold it. Natural gas was the strongest commodity last week, up 11.5%. Here is copper, down 2.3%, still in this pattern for now. But if we were to go into recession next year, I could see this weakening. They call it Dr. Copper. And let's face it, China is one of the biggest consumers of copper, and their market's not too good. Here's copper on the daily. You can see this little flag, which we broke down from a little bit. You also had the moving average ribbon bearish squeeze. Next, chart 78, here's DBA, finally pulling back slightly. DBA's had a really nice rally, though, out of this cup and handle that I pointed out back in January and February. You can go back and listen to my newsletters. You'll see that pattern really played out. Here is the monthly chart. So notice we got a little bit in that next supply zone. Over time, I think we can make it to this upper supply zone up here. No MACD divergence here. Remember, this is a monthly chart. And here's the daily chart. I talked about that ABC pullback there into October. That was a good buying opportunity. Still holding up very well. And chart 81, here's soybeans. I haven't shown this for a while. Soybeans have been declining since 2022. There is a little potential double bottom here. So SOYB is I think the ETF. Not that I trade soybeans, quite honestly. I doubt any of you do either. And let's move to the last part of the newsletter, the precious metals. So here's gold. So this is a monthly chart. Gold is down 1.34% in the month of December. Beautiful pattern. Remember, gold is in a bull market here. We talked about this cup and handle, this ascending triangle that we broke out of in early this year. Wave 3 here. We view this pullback as a wave 4. But ultimately, once this is done, guys, we're looking at a new all-time high, wave 5. I think it should go well above 3,000. Next, chart 83, here's the weekly chart. Again, down 1.15%. Still holding this channel for now. Again, you can see this absolute nice base that gold launched from early in the year. Now, chart 84, here is another chart. Again, this just shows how we favor this wave 3 of 5 high there in October at that 2,800. We're working on a wave 4 consolidation. Once this is complete, guys, I'm looking at new all-time highs in that wave 5. Now, here's the daily chart I'm looking at right now. So there's actually three options, guys. One option is a simple zigzag, wave A, B, then we come down, and wave C, maybe come down near around the 200-day moving average. Okay. Another option is a coil where you have an A, B, C, D, E, then you break out. Yet another option would be a flat. So we'll see which one develops. Again, corrective patterns can take many forms. Either way, though, once it is complete, I'm looking for gold to go to new all-time highs. Next, chart 86, here's silver. You can see silver trying to bounce a little bit around its 200-day moving average. It's been quite choppy here lately. That said, once the correction in the precious metals is over, I'm looking for silver to moonshot eventually up to these much higher levels. Finally, moving to the gold, the mining stocks. Here's GDX, the weekly chart, down 5.25%. Stocks have been weaker than the metal, and you can see it by the ratio, GDX daily ratio. Here, added some fibs, so you could see just a little bit below the 50% fib. Maybe that makes it down to the 61.8 fib at least. We'll see. And chart 89, here's the daily chart of GDX. So after breaking that channel in early November, bounced off the 200-day moving average. We had a simple ABC three-wave reflexive bounce into the 50-day moving average where we failed. Notice how the moving average ribbon had a bearish squeeze coming down again. Honestly, I think we at least test that 61.8 fib, if not even get down to this, maybe the next demand zone down here around 29.30. I think that would be a good buying opportunity though. And guys, the final chart, here's a system chart, the BP GDM Rinko system chart. It's a great, nice, clean chart for trading GDX and the mining stocks. It's based on a one box Rinko size. Okay, so this gave a great sell signal back here in October when it was in the overbought region. Remember, bullish percent charts go from 0 to 100. So it was way overbought there, around 90%. And it has still been downtrending. It's now at 53.5%. And I don't know if it's going to make it all the way to the oversold territory, but it's nice to see this unwinding. All right, guys, futures have opened, and ES futures are up this evening. ES futures are currently up 19 points. All right. Again, happy holidays, everyone. Merry Christmas. Thank you for all your support. And if you happen to just be on YouTube, you got to consider subscribing to us, write into us. We'll help you out. We'll get you started. And that's it. All right, guys. Take care. Enjoy the rest of your Sunday. Enjoy your Christmas this week. Thank you.